Goldman says we are hitting 3.8 trillion in M&A by 2026. Seeing Apollo drop 3.7 billion on Japanese glass today, I actually believe it.
You always buy the banker math. That volume requires AI hype that just isn't sustainable.
Oh, come on, the money has to go somewhere. UniCredit just lobbed a 35 billion euro grenade at Commerzbank.
European banking mergers are where capital goes to die, Nate. But that Apollo carve-out? Now that is a structure we need to unpack. The rundown. $3.8 trillion. That's Goldman's projection for pure M&A volume in 2026.
They're basically saying the floodgates are opening. Easing rates, AI capital investments, massive fiscal stimulus. It's a banker's paradise.
Or a banker's hallucination. I need to see actual closed deals before I buy the 3.8 trillion narrative. Right now, we're still seeing way too much tire kicking.
Oh, come on, the deals are happening right now. Look at Europe. UniCredit just dropped a massive 35 billion euro bid for Commerzbank.
Which is exactly my point. A bid is not a closed deal. Do you honestly think German regulators are just going to wave through a cross-border takeover of their second biggest bank?
Money talks, Maya. 35 billion euros is a very loud conversation. Plus, consolidation is the only way these European banks stay relevant.
I'll believe it when the regulatory ink is dry. We should definitely watch the Commerzbank board this week to see what kind of defenses they put up.
Fair enough, but the middle market is definitely moving. Olympus Partners just agreed to sell EyeSouth's retina business to Cencora for $1.1 billion.
Now that one makes sense. It's a classic carve-out to simplify operations. Market observers are practically screaming that corporate carve-outs will dominate the next 12 to 24 months.
Speaking of dominating, the rumor mill is spinning hard on Gilead Sciences, $2 billion for Uro medicines.
With $1.5 billion of that in upfront cash.
Exactly. Cash is king in biopharma. Right now, we'll be watching for official confirmation on that before the week closes. But my absolute favorite rumor of the week, Blackstone evaluating a stake in the Global Cricket League.
Wait, really? Cricket?
Private equity's appetite for live sports is literally bottomless. You can give it 5 years and Apollo will be buying minor league pickleball teams.
Don't give them any ideas. They're already busy enough backing QXO's $2.25 billion Kodiak building acquisition. Apollo just led a $1.2 billion financing injection for that one.
Apollo is everywhere this week, which actually brings us to the main event. They just dropped $3.7 billion on their biggest private equity investment in Japan to date.
Right. Nippon Sheet Glass, valued at roughly 590 billion yen. Let's talk about why private equity is suddenly so obsessed with Japanese corporate carve-outs. The big one.
You do not just wake up and drop $3.7 billion on a Japanese glass company unless you see a macro shift that everyone else is missing.
Or unless you are Apollo and you just have so much dry powder, you are literally looking for anything transparent to buy.
Wow, we are starting with glass puns.
I could not resist. But seriously, Nippon Sheet Glass, 590 billion yen. This is Apollo's biggest private equity deal in Japan to date.
It is huge. And it is the perfect example of the corporate carve-out trend accelerating over there. Japan is the absolute promised land for PE right now. You have activist pressure, you have companies desperate to simplify operations, and you have a weak yen making it incredibly cheap for US funds.
Cheap on the currency exchange, sure, but look at the underlying asset, automotive and architectural glass. Do you know how cyclical that is? Car sales are softening globally, and commercial real estate is a mess. You are buying into a massive capex-heavy business right before a potential global slowdown.
I completely disagree. The play here is not about selling more windshields next quarter. It is a classic Apollo carve-out and optimize strategy. They are buying a market leader at a discount because the parent company wants a cleaner balance sheet.
Optimize what, Nate? You can only squeeze so much efficiency out of a glass furnace. They run hot, they run 24/7, and they cost an absolute fortune to maintain. I read through Nippon's last 3 earnings reports. Their energy costs alone are eating them alive.
Which is exactly why a public company wants to offload it. Apollo comes in, takes it private, absorbs the energy cost volatility away from the public markets, and streamlines the whole thing.
I just love that you are suddenly an industrial glass furnace expert.
I spent 20 minutes on Wikipedia before we started recording, Maya. I am basically an artisan glassblower now.
Clearly. But here's the detail that actually caught my eye in the footnotes. The real estate footprint. Nippon owns massive legacy industrial sites all across Japan. I am betting Apollo sees a ton of hidden value in the land, not just the glass.
Wait, really? A real estate play disguised as an industrial buyout?
It has Apollo written all over it. Strip the real estate, do a sale leaseback, and use that cash to pay down the acquisition debt. It is page 1 of the mega fund playbook.
Okay, that is actually brilliant. And it fits perfectly into the broader narrative. Goldman Sachs analysts just put out a note projecting $3.8 trillion in pure M&A volume by 2026. They cite easing monetary policy and corporate simplification as the main drivers.
3.8 trillion. That is a lot of advisory fees for your former banker friends.
Do not remind me. I am trying not to think about the bonuses I am missing out on. But Apollo is clearly front-running this wave.
I will believe the 3.8 trillion when I see the actual term sheet signed. But speaking of massive deployments, Apollo looks almost conservative compared to the absolute chaos unfolding in the European banking sector.
Oh, you mean the 35 billion euro elephant in the room?
Exactly. UniCredit making a run at Commerzbank. Voices.
$3.8 trillion. That is what Goldman Sachs is projecting for pure M&A volume in 2026.
I read that note. They are hanging a lot of that massive number on AI capital investments and fiscal stimulus. It feels incredibly optimistic.
You think? I actually buy it. We are already seeing the groundwork right now. Market observers are pounding the table on corporate carve-outs, seeing significant growth over the next 12 to 24 months as companies simplify.
Okay, I agree on the carve-out trend. We literally just saw Apollo drop $3.7 billion to acquire Nippon Sheet Glass in Japan.
Exactly. It is their biggest private equity play there to date.
But 3.8 trillion overall? Come on, Nate. Half of these AI investments are just tech giants shuffling money between themselves and startups to buy compute. That is not pure M&A. That is cloud credits in a trench coat.
Cloud credits in a trench coat. Okay, fair. But you cannot deny the cash piles sitting out there right now. Look at the rumor mill today. Gilead Sciences is supposedly circling Uro Medicines for $2 billion.
Right. And the structure there is what actually matters. 1.5 billion of that is an upfront cash payment. That is a massive check to write.
Which proves my point. The money is there. Firms are just getting creative about where to park it. Even Blackstone is reportedly looking at taking a stake in the Global Cricket League.
Wait, really? Cricket?
Yes, private equity cannot get enough of live sports. The multiples are crazy, but the cash flow is stickier than a stadium floor.
I guess nothing says synergy like a 5-day test match. But if we are talking about massive checks and aggressive plays, we need to look at Europe, because the banking sector over there is about to get very messy.
Oh, you mean the 35 billion euro elephant in the room? Spill the tea. So you're telling me a bunch of guys in quarter zips sitting in a Manhattan boardroom just suddenly discovered a deep, abiding passion for wickets and googlies?
I'm telling you, Blackstone is looking at the Global Cricket League and seeing a massive untapped broadcast rights multiplier.
Oh, I know. Private equity's appetite for live sports is totally insatiable right now. But cricket, the matches last for 5 days. That's a lot of ad inventory to fill.
It's 1 billion plus viewers globally, Nate. The math works. But honestly, I'm way more interested in the rumor coming out of Foster City today.
The Gilead Sciences whisper?
Exactly. The word is they're nearing a $2 billion buyout of Uro Medicines.
Immunology plays are hot right now. We see this all the time.
Not like this, we don't. The rumor includes a $1.5 billion upfront cash payment.
Wait, really? 75% upfront in pure cash?
75% for a clinical stage biopharma.
That's a total banker flex. You drop $1.5 billion in cash on the table to absolutely freeze out any rival bidders. It's a shock and awe campaign.
Or it's pure desperation to refill a pipeline and Uro had them over a barrel. You don't hand over that much upfront unless the target has massive leverage in the room. I want to see the earnout structure on that remaining $500 million.
You always assume the buyer is getting fleeced. Maybe they just really love the clinical data.
I assume nothing until the SEC filings drop, which might be by Friday if the rumors hold up.
We'll definitely be watching for that official confirmation. But speaking of shock and awe campaigns, I think we need to cross the Atlantic. 35 billion euros is a massive opening salvo.
UniCredit definitely isn't playing games. Let's look at what Commerzbank's board and German regulators are actually doing to build the barricades. Tomorrow's radar.
I'm glued to the European banking feeds tomorrow. UniCredit dropping a 35 billion euro bid for Commerzbank is aggressive.
I want to see if German regulators actually put up a fight. My money is on a massive regulatory headache.
I completely disagree. The ECB wants cross-border banking consolidation so badly they can taste it. Germany will huff and puff, but it happens.
We'll see. I'm also hitting refresh on Gilead Sciences. The whispers about a $2 billion buyout of Aro Medicines are getting very loud.
1.5 billion in upfront cash, supposedly, which tracks if you buy Goldman's wild new projection. They're calling for 3.8 trillion in M&A volume by 2026.
3.8 trillion. That's pure banker math, Nate. You guys just extrapolate a straight line to the moon based on one rate cut.
Hey, Blackstone is reportedly evaluating a stake in the Global Cricket League. Cricket. The money has to go somewhere.
Fine. Point to the bankers. We'll be tracking the Gilead filings and the Commerzbank drama tomorrow, so keep your feeds open.